Have you ever wondered how professional traders consistently beat the market? The PO3 model has paved the way for generations. In this video, I'll show you how it works and how I built a proven trading system using the PO3 model. If you don't already know me by now, my name is Michael Deng, aka Dengstrat, and I built a trading community to teach this model, so let's dive right in. I didn't create the PO3 concept. It was here long before me and even ICT. ICT himself credits Larry Williams for pioneering this powerful trading strategy. My goal is to simplify it and help the old and the new generation of traders achieve profitability by trading with this model. Here's a clip of Larry Williams briefly explaining the PO3 model.
For the most part, price activity on charts is very random. It really doesn't represent much of anything other than trend, and a few patterns that I found in my over 50 years of trading can be very successful. Let me teach you one right now. If I've seen prices in a big downtrend, they move sideways and drop, but immediately come back up, back into that trading range, that's a buy signal. Why? Because during that trading range, there was accumulation going on. The fact that it broke down fills a lot of long positions. Professional money will buy there, and if it immediately comes back, then that nails it. They've been buying, and I want to get long the market.
To recap that video of Larry Williams talking about the strategy, he breaks it down to three simple components. The first component, or the first phase, is the accumulation phase, where price creates a range, it trades sideways. Basically, this is orders getting built up. The second phase is manipulation. So during the manipulation phase, price breaks the range low, and you see a manipulation and you get a deviation of the range. So this is your range. Okay, that was the range that formed in the accumulation phase. Then this is the manipulation phase for phase 2. This is the price deviation of the range. And then the third and final phase is the distribution phase. So once price quickly reclaims back inside of the range, this is where you're looking to go long towards the range low, and then you're targeting the range high and potential buy side liquidities above. And then vice versa if you're looking to short as well. So if you're looking to short, you're basically you have a range forms during accumulation, and then you'll get a price deviation of the high. And then once price reclaims the range, then you're looking to target sell side liquidity. Now I'll show a raw, unedited, live backtesting session. But before I do, if you want to join our PO3 model trading community, click the button below to join today. Gain instant access to our live trading streams, signals, market outlooks, the PO3 model trading course, and be a part of a supportive trading community. Don't miss out on the opportunity to sharpen your trading edge and achieve consistent profitability. What's up everyone, it's Michael here, aka Dengstrat. Today in this video, I will be doing a live backtesting session on the PO3 model. So this video will be raw and unedited, and we will dive right in. So I just bought a new FX replay account. We will be starting off with a fresh account, named it PO3 model because on this account, this is the only model that we will be backtesting and using. So starting off, we will create a new session, and for the name, we'll do PO3 model. The account balance, we'll do a 100K account. So if you buy funded accounts, typically most people, they'll get anywhere between the 10 to 100K. So 10K, 50K, 25K, 100K. But for now, we will just do a 100K account. And for the asset, we'll do Euro USD, which is probably what I day trade the most. I also trade indices as well, and this model works for indices. This model works for crypto, so it works for all markets. The initial date, let's pick a random date. We'll go back a little bit. We'll do September, and then we'll just go back 1 year. I would start it on September 1st, but I like to start things on a Monday, so we'll start on the 4th. And then we will end this on the 29th. Was that the 29th? Yeah, the 29th. So we will be backtesting for one entire month for this session. All right, so we'll create new session and we'll go to the chart. Let this load. All right, here we go. Come on. If this takes a while to load, I might just cut this out. All right, here we go. Let me fix my video real quick. Make this adjust it so it's a little smaller so you guys can see everything on my screen. Right now we'll take off the volume. I don't use volume, strictly just candlesticks and a couple lines. So basically, before we begin, I just want to go over and give you guys a visual of the 3OP model. So starting off, the first phase of this model is accumulation. So you're looking to find a trading range. That's the first thing that you have to do. So typically, I would want to see a range form like this. So this is sideways accumulation that's currently happening. The next phase of this model, you want to wait for manipulation. So either it takes out the high of the range or it manipulates and deviates below the range. So for an example, let's say we get a deviation below the range, okay? Now the next step is to wait for a fast move back up into the range. So you want to see displacement like this, and then we reclaim the range low. So basically, this again is your range high. This is your range low. And if you have a bullish bias, typically you want to target like a liquidity level up here. So for an example, this could be the previous day's high, or the previous week's high, or just an old daily high, old hourly high, whatever the case is. But you're looking to target a level above. The first target though is going to be the range high, and then you'll want to see if there's a clear draw on liquidity. So for this example, we'll do the previous day's high or the previous week's high. So basically, again, phase 1 is accumulation. Phase 2, you wait for manipulation to happen and then a fast displacement move up to reclaim the range. Once it reclaims that range and you get this nice big move like that, that is your, that's basically confirming that this is manipulation. And then now you're just looking for long entries near the range low, and then you're going to target the range high, and then any additional buy side levels. Okay, so that is basically the PO3 model for the long side, and then vice versa if you're looking to short. So you still have a range, you still want to find the range. Then 1 second, let me move this down here, and then we'll change this to previous day's low and then previous week's low. Again, these are two just examples of sell side liquidity levels. You have imbalances that you can target. You have swing lows on the hourly, the 15-minute, the 4 hour, the daily, whatever the case is. So if you're looking to short with the PO3 model, you still want to wait for a range to form for the phase 1, and then you're looking for a deviation of the range, and then after this manipulation move up, to confirm that it's manipulation, you want to see a fast move down like this, and you want to see price get back inside this range. Now you're looking to short in this area, and then the first target will be the range low, and then the second target, will be the previous day's low. Or, if your range is big, so for an example, let's say this is your range. Okay. So you have that established range, you get the deviation of the range or the manipulation move, and now you get that fast move back inside the range. Now you're looking to short, your first target is going to be this, and if this gives you a 2R setup from here all the way to down here, so for an example, like your stop is going to be up here, your target's going to be the range low. So if it gives you a 2R setup like this, then you can close the entire position at the range low. Again, you don't need to be greedy. 2R is more than enough. If you have a 50% win rate with 2R, that is, you're going to be very profitable with that. A 2R, if you're using a 2-to-1 risk to reward, 1-to-2, risking 1%, gaining 2%, and if you have at least a 33 or 34% win rate, then you'll be break even. This model is very, a high win rate model, and if you can get 2R on these setups, it will, you'll really increase your account a lot. So that's basically the PO3 model, and this model works on the lower time frames and also the higher time frames. It works on 1 minute to 5 minute setups. Typically those are lower probability. I like to use a 1 minute to 5 minute for execution. But for the structure, I like to find ranges using the 5 minute, 15 minute, and then, execute on the lower time frames. But this also works on the daily and the weekly and the monthly time frame. So if you think about the weekly candle, right? Let's go to the weekly chart real quick. If you look at the weekly chart, almost every single candle has a wick above and below. There's some rare cases where it doesn't, like this right here. This also could just be the broker or exchange, and there's a wick on other exchanges, but majority of every single candle has a higher and a lower wick. So basically what that means is that wick is accumulation. So if you don't understand candlesticks, right, for an example, we'll do this candle right here. So if you zoom in on this a little bit, the open on this candle is right here. Okay, the market opens, Sunday night for the Asia session, but basically it opens on Monday. Okay, and then this is the open. The first move that happened, it went lower. Okay, and then once it went lower, price went back up, back above the open. So once price goes lower and then back above the open, that tells you that it's most likely a manipulation move and that a wick has formed on the weekly candle. Now that price is trading back above the open, now you can look to go long in this case and trade the body of the candle for your expansion move. And then, price went higher, and then, ended the week with a short-term correction. So basically, if you look at a weekly chart and kind of break this down, I like to use Monday's range kind of as the trading range for the week. So for example, this here, okay, is the open. This circle is the open. This is the Monday's open, or Sunday night to be exact, but the open for the week. And then let's say, Monday, it creates a range like that, okay? Now, what I like to do, draw a line on Monday's high, draw a line on Monday's low, and basically this is your range for the week. So I like to use this for bias for the week, and then now we're just simply waiting for price to take out the range high or the range low for manipulation. So for an example, if it takes out the range high, quickly comes back in the range, now I'm looking to short, for the rest of the week. So this is the PO3 model on a weekly, time frame, using it for weekly candles, higher time frame biases. With that being said, now we will dive into the backtesting session. All right, so like I said, the PO3 model works on all time frames. So, typically before a new week starts, I want to go on the higher time frames, starting from the monthly, and kind of work my way down. So basically what I'm seeing here, okay, this is the monthly chart. This chart's going all the way back to 2004. We necessarily don't need to see all of this price action. We're just using this to build out a bias, higher time frame bias. So right now, what I see is this is a key low that got taken out. So if you look at this, pretend that this is an M5 chart, the 5-minute chart. Price is trading sideways. Okay, it creates a range. So that's your range low. This is your range high. Then price takes out the range low and then quickly comes back inside the range. And how you can tell if it quickly comes back inside the range, you want to look for imbalances in the market or fair value gaps. So this fair value gap gets created, and then, if this was an M5 chart, basically what I'm looking for is I'm looking to long near the range low, stop down there, target the range high. That's what I'm looking for if this was an M5 chart. And so you can use that for your higher time frame bias. So because, price is trading back inside this range, you would want to be long, but one thing to note here is there is this big imbalance below, and if I was treating this as an M5 chart, I would want to see price retrace to this low. So with that in my mind, now I'm gonna zoom into the weekly chart, and on the weekly chart, let's see. So on the weekly chart, you can see that we traded sideways a little bit here. So I'm using this basically as the range high, and then I'm using this as the range low. So I just went over the range, the monthly range on the monthly time frame. Now I'm on the weekly chart and I'm drawing out my range on the weekly. Again, range high, range low. Now we got a deviation of the range high. So you can see price ran these highs in the range high and then quickly went back into this range. Okay? And how you can tell if it's quickly, you can see this fair value gap gets created okay? And then after it got created, the next week it ran into it, rejected that fair value gap, and also rejected the range high, and then has been selling off since. So right now, this weekly chart is quite bearish. I think the higher time frame objectives for this will be most likely going to be this low that we can try to target for this month, and maybe even potentially this low. But this low will be the main objective for this month. Anything more is a bonus. Typically we take out a low like this, then we might retrace a little bit higher and then go for this low down here. So that is my bias on the weekly time frame. The monthly time frame and the quarterly, I'm bullish in terms of that's a very, very higher time frame. That's like taking a trade and you're holding it for like half a year or something. So I'm a day trader and I'm not doing that, so I don't need to worry about that as much. I want to just worry about the weekly and the daily and kind of keep the monthly chart in mind. So with this being said, this is the weekly candle. So this was the previous week's candle right here. You can see this is a big shooter. Price opened right here, went higher first to take out the previous week's high, and then closed or went back inside the range and now closed near the low of the range. So now we'll move to the daily chart. And again, this is kind of the range that I'm looking at right now. We're already close to taking out that level. But that being said, let me move this to up here. And then, we'll start the back test now. So I'm going to change this to the 3-minute time frame. I'm going to change this to the 3-minute as well and speed this up a little bit. All right, so again, because this current session is Monday, I typically would want to see Monday's range form and then kind of go from there. Ideally, I don't like to trade on Mondays unless it's a really, really nice A+ setup that forms. So again, right now, my target is going to be this low down here. We're already close to taking that level out. So let's zoom in a little bit. So right now we're retracing after this big down move, which is normal. Ideally after a big down move like that and it hasn't taken out the target, I would want to see a retracement like this for price to return back into a premium, and then you can start looking for shorts. So this is Monday's session, and I'm typically trading the New York session or the London session. For this back test, we'll be doing the London and the New York session. Typically, Asia builds out the range, so I don't like to trade Asia too much, or at all, really. So right now the time, let me fix the time. We will change the time to New York local time, so Eastern Standard Time. So right now, price is it's 8 a.m. currently in this simulation. So now we're starting to see some displacement down here. What I currently see is, right here we traded sideways a little bit. And then, you can look at that as your range. We have low resistance liquidity here. The only thing is now it's kind of getting late in the day, so I don't expect this level to get hit during the day or during Monday. So I'm probably not gonna, let's see. I'll set a limit. Typically, I like to cut my day by like 11. So if I get filled by 11, then then I'll get filled. So let's set a limit. We will set our stop up here, target down here, and then I'm looking for a 2R, so I have to adjust the limit a little bit. So we'll go ahead and place this order. First I need to click on this and then place. So everything in this backtesting session, we will do a 1% risk on the account. So we're risking $1,000, looking to gain $2,000 on the account. And if that compounds, then of course that's going to decrease or increase. So we'll go ahead and save to place this order, this limit order. Then we'll let things play out. If it hits 11, then I'll close it. So yeah, it just hit 11 a.m. So I'll just cancel the order since I'm not trading. You have to treat this as much as a live session as it can. So if I kept it, let's see how this plays out. This could also be a PO3 model, range, deviation. Maybe it takes out this long or this high, but market is quite bearish right now in terms of the higher time frames. It doesn't really matter what happens here. I just kind of want to see things play out. So now it's the PM session, and again, I'm not trading this session, but if we hold these lows, then I will continue to look for shorts on Tuesday here. Alright, this is still the Asia session, so I'm typically not, taking trades during this time. It looks like we're going lower. Ideally, what I would want to see right now going into the session is we have lots of highs here. If we can clear out some of these highs, and basically this is the range that formed. Now I would look for a deviation on these highs and then see if we can go lower from there. Basically, here, let me show the visual. Basically raid these highs and then kind of go lower from there, but we'll see. It's getting close to the London session now. So now it's 2 a.m. Eastern time, and now we're in the London session, and it just got hit. So no setup here. First 2 days, no setup, even though price ran to our target. So I'm gonna go ahead and clear some of these charts. It was a good read, but like I said, no setup that formed. We will see what happens on Wednesday. Let me go out, zoom out a little bit onto the daily chart and see where we are. So you know, again, most likely, let me remove this level. Most likely, I think we're gonna draw towards these levels. You have the rate here. This is major displacement. You know, this low here could possibly be the next draw. This intermediate term low, and then kind of see where we go from there. We did just create an imbalance as well, so you have to keep in mind that price could retrace up into this level and then go lower, but let's go ahead and see. So now it is Tuesday's session. Is this Tuesday? Yeah, this is Tuesday's session now. Oh wait, I think it went back for some reason. It should be in Wednesdays, so we'll let this play out a little bit. Don't see anything that I like so far, and now it's 11 p.m. So, or excuse me, 11 a.m. Eastern time. All right, so we'll let this get to the London session, and then we'll start marking out our charts from there. I'm gonna speed this up a little bit. All right, so here is, we're in the London session now. Let's zoom out to the H4 first. We do have this big H4 fair value gap that formed. This could be a potential POI. POI means point of interest. And then I'm gonna mark out this high right here. That's an H1 high, and then we'll go to the M15, and yeah, so everything's marked out now. Now I'm simply just looking for a range to form, get manipulation, and then you know, target the other side of the range. So looks like this left equal highs there. I think we'll probably take that out. Seems like a range is forming right now, though. Lots of sideways action going on. Maybe we'll wait till the New York session. I'm gonna remove this line here. All right, yeah, it seems like a range has formed. I'm gonna ignore this wick. I think that wick was from news. So that is the range high that's formed from London, and then this is the range low. So looks like right now we could potentially, this could potentially be manipulation. So I would want to see these highs get taken. If those highs get taken, and then we, you know, get some displacement lower, then I would be interested in shorts.
Alright, so that high did get taken out there. Now we're in the New York session. Let me go to the lower time frames, like the M3. It might make another high. Alright, now let's see where this closes. Let me go to the 1 minute real quick. Basically what I'm seeing is this is the range that formed. We took out liquidity and now we're trading back inside the range. You know, I'm gonna give this a shot here. We will go short. Let me go back out to the M3. Okay, so if you guys aren't seeing what I'm seeing, treating this as a deviation of the range. Again, we took out some liquidity here as well. And we took out that H1 high barely, but we did take it out. So now let's look to place orders for shorts. I'm gonna target the range low here. And we will put our stop. So ideally I want to put my stop up here. So I might have to move my limit order a little bit. So I gotta put it right here for it to be a 2-hour setup. So basically my limit's also inside that daily or 3-minute fair value gap. So if I can get a fill inside there, that would be ideal. Alright, risking 1%. So the limit order is in. And now let's play this out. Oof. Oof. Look at that. Just missed my limit. Literally by probably like a pip, which is crazy. Okay, that's fine. See, the only thing in this case that I could have done is, because target got hit, I'll cancel that. Only thing in this case that I could have done is, you know, put my limit here, or take the market order and go short. And I would have had to move this a little further down. Move the TP a little further down. Because it looks like, yeah, it took out the previous day's low there. Alright, so I'm just going to journal this. I think this was a nice setup to journal. And then I created a Notion, just a gallery. Typically I have a trading template, like a table, for you guys to input stuff. So, you know, I can share that with you guys. But for this trade, we will do no trade plus 0. Or I'm just gonna note this no fill. And then we will just journal that. Actually, I gotta change this chart because I want to show the order that I put in. Looks like that might have been a news candle as well. All right, so we'll just put both these charts, the one that should have, the one that I should have done, and then the one that I did. All right, and then we'll let this play out. So far on this week, we have one setup here. You know, we did have that one earlier in the week that kind of went through the PM and the Asia session. So I don't really count that as a valid setup, just because it's out of the time zones that I trade. All right, so the Asia session here is close to being over. There's midnight, and then, all right, so I'm pausing it now at 2 a.m., the start of the London session. Again, I'm not too biased right now. Let me clear some of these charts. I think these lows down here look really weak to me. I'm just gonna be cautious though, just on shorts right now, just because, you know, we're trading like in a big discount. Let's see if we take out these levels. If we don't take out these levels, that would be, you know, even better for, yeah, don't really see a setup right now. All right, so we take out these levels. Looks like it's about to be, yeah, now it's 11 a.m. This here could be a deviation, so this is the range. This could be the deviation. It looks like these lows might be equal lows though. You know, if these are equal lows, then I think shorts will be still in play. Yeah, so those are equal lows. So I think maybe Friday we still take out and go lower. One thing that I do see, let me pause this real quick. So we got some sideways trading here. We have lots of equal highs here. So this possibly could be, you know, the range. This here, we could see manipulation during the London session. So I'm gonna go out and play this. It's still Asia right now, so we'll let things play out a little bit more. All these lows down here look weak as well. So yeah, my bias currently is, you know, looking to at least take out these lows, maybe even those lows down there. It looks like we're forming another range here as well. I'm just gonna remove this for now, since we took that level out. All right. Ideally, right now, I would like to see a raid on this high here for the London session. I'll extend out this high since it is liquidity above it. That is previous day's high. But if we take out the previous day's high, I don't think we'll take out the previous day's low as well. So let's go play this out all the way until we get to the London session. Alright, so this is the current range that I'm watching. This is the range low. This is the range high. And you know, this low here is a low to watch for as a target. Alright, so now I'm simply looking for a deviation on this high. So if we can, you know, trade above it, see a manipulation, and trade back inside the range, then I will look to short. Alright, so this is the M3. We've closed inside this range now, so I am going to short here. And I'm just going to place a market order just so that I can get filled, because last time it did not fill me. So we'll target a 2.3 R setup here, and we will place the order. We will go market short on this, and yeah. So we'll let this play out and see how it does. So it took out the range low. Hopefully you can get one more flush. Alright, there we go. Let's see if it continues to take out these lows. Maybe it does, maybe it doesn't. I think it did. Let's see. Nope. Front run these lows. But that's fine. We got our, you know, 2R. We got our 2.3R actually on this setup. So, again, find the range. Wait for the deviation or manipulation. Wait for the close back inside the range. Target the other side of the range or liquidity. That is the PO3 model in its simplest form. So we will go ahead and journal this. So this is trade 1. And then this was plus 2.3R. Okay, now we will go back to the charts. It's Friday, so I'm not going to look for another setup. We got at least one win this week, up 2%, 2.3% on the week. Look at that move. And then, yeah, up 2.3% on the week. We did miss one setup, but again, you're not gonna get every single setup. Alright, so now it's Sunday, so this is the opening price there for Monday's daily candle. Again, my bias is still bearish right now. Let's so we've created a daily fair value gap here. So I'm gonna remove some of these drawings. So we have two daily fair value gaps above that got created. I think the draw on liquidity is still going to be down here for this month. But right now, I would at least like to see price raid this daily fair value gap, just because it seems kind of a little bit extended lower. So that's going to be my bias going into the new week. Again, my higher time frame bias, if you look at that weekly range, we're still within that range, so that's why I'm looking to target this low and maybe potentially that low, but mainly this would be my objective. All right, we'll go to the M5 chart. I'm gonna slow this down a little bit. It's going a little too fast. All right, so the key levels that I'm watching right now is this daily fair value gap and this low down here. Let me pause this. Now we're getting into the London session. I'm gonna play this out candle by candle now. Don't see a clear range that's formed yet. A clear range or deviation. Looks like a range is now forming though. So this could be, now it's 5 a.m. now, so the London session just closed. Let's take a look of London's high and London's low. So this is London's low right here. This is London's high, or London starts at 2 a.m., but I'm just going to use this high as our range. So this is our range that's formed. Now let's wait for a manipulation on either side. And then if we manipulate higher, ideally I would want to see price manipulate higher, tag this daily fair value gap, and then, you know, target that range low. But let's see. Looks like we might take out still trading inside the range, so the range is still building out. Now it's 7 a.m., so now it's the New York session, and looks like we will take out the low, maybe. Yeah, so now we took out this low. So now let's play this candle by candle, see if we can get back inside the range, and now we're trading back inside this range. So let's wait for one more close. All right, so a small little fair value gap has formed here. We're trading inside this range now, so this could be a potential long setup. And ideally, you know, target the range high and potentially maybe that daily fair value gap. So let's we'll go market order long on this. You know, I don't really care. Ideally, I mean, you could place a order in that fair value gap, wait for a fill, but all right, so this is a perfect 2R setup to this high. Let me see how many R it is to this high. It is 3R to this daily fair value gap. I'm not going to be greedy. I will take the 2R. Let's see. market. So this is a buy. So our stop is down there, targeting the range high. So we're in this position now. Let's play this out. All right, we did tap that level. It was looking kind of bearish for a second. Let's play this out candle by candle. And typically when I'm in a trade, I just let it run to either TP or stop loss. I try to not do too many things in between. So it did hold the range low. It looks like it should. Let's see. Oh, where's that candle? That's 9:30. So that's when equities market opens. That is not something you want to see though. But it did close. It did hit the range low and wick off of it. And that is a nice close there. So there we go. All right, so this is a 2R setup. You can see clear range from London, deviation, target the range high. Again, PO3 model. Trade 2 plus 2R. And yeah, that was a nice long setup there. Let's let this play out. It's late, so we tagged the daily fair value gap. Not gonna look to take any trades here on Monday. One is more than enough, especially on a Monday. Looks like another range is forming here throughout the PM session. We will wait until we get to London though. I'll remove this for now. Alright, so this here, what I'm seeing is we raid this high, we have a clear range, we're trading back inside the range. We did take out the range low. But let's go to that daily chart again and show you what I'm kind of looking at. So we rated this daily fair value gap. I still think this will be the higher time frame target. Not expecting to hit that level this week. For the rest of this week, I would want to see price go here. So also one thing to note, right? If you draw out Monday's range, so I'll extend that out. I will extend this out. Let's see if Monday's range plays out for the week. So this is the open, right? We traded higher first. And now, ideally, now that we've taken out Monday's high, we rejecting this daily fair value gap. The next target is going to be Monday's low, and then this is the previous week's low. So these will be my targets: Monday low and then previous week's low for the rest of the week, assuming we close today inside Monday's range. So let's go back to the 5-minute chart. This is the Asia session. I don't know. Let's see. I don't know if London will raid this high. Seems like it. Yeah, seems like it won't. Alright, let me look at this. Let me go to the M15. Alright, so again, this is Monday's range. I don't think this high gets rated during London, just because we have a change in the state of delivery. So basically this is an order block here, and then we also have a small little fair value gap as well. But this is, the order block. So ideally I'm targeting Monday's low. Let me see if I can get a setup within this. So if I put my limit there, target this low. See, if I put my stop all the way up here, it's not going to give me 2R. I might have to move that a little bit to the range high. So this is a decent setup. I will be placing a limit sell on this. We need to see price retrace first to get filled. Alright, I'll just let this play out. Oh, wait. I accidentally did a market order, and it's going pretty well right now. I would not have gotten filled if I placed that limit there. Come on. Alright. I'm out. So where was the entry? The entry was like somewhere right here. Let me go down here and look. Close position. That was only because I accidentally did a market order. That was only a 1.4R setup, or 1.4R on the total. The entry was 73.78. So 73.78. Let me move that, and then we'll just journal that. 73.78. So that was right there. Okay. Again, you can see this model repeat over and over again. Range, deviation, target, Monday's low. So this was an outside day there, meaning we took out the previous day's high and the previous day's low. So I will journal this. We're doing pretty well right now. We're on a nice streak. Okay, trade 3 plus 1.4R. Just a note on this, so I'm just gonna say meant to do a limit order inside the M15 FEG, but accidentally went market short. Also just gonna say would not have gotten limit filled. Alright. Now we will go back to the charts. I'll speed this up a little bit. we trade back. Take out Monday's low. I don't know what happened here. These are some interesting candles at the close. Let me pause this real quick. Alright, the only levels that I'm interested right now, this is Monday's range. This is the previous day's high. So we'll see what we can get from this. Seems like a range. No, I wouldn't call that a range. I would need to see a rate on probably these highs for me to short. Alright, so that was 8:30 news. 8:30 news candle. Don't see any setups right now. Oh wait, I'm still on the M15 chart. I need to change to this. It's too late. It's already 2 p.m. so didn't really see any setups in there anyways. The only thing I wanted to see was this, kind of treat this as the range, look for deviation on this high, and then kind of target this imbalance there, but didn't give. Let me change this back to we'll go M5. Let me pause. I'll pause it once we get to London, and then we'll mark up the charts. We're in the London session now. Let me zoom out first. Go to the 1 hour chart, and so that's Monday's low. We kind of have equal lows here. I'm just gonna remove Monday's range now, since we've taken out the high and the low. Alright, so these lows and that low is relatively close together. These highs and these highs are close together, so it's gonna be hard to find a setup within this until we take out that side of the range or this side. But with that being said, let me check the 15-minute. I'll check the 5-minute. We'll go back there, and then alright, we'll play this out candle by candle. Don't really see anything yet. I'll just play it out. I don't want the clicking noise to be annoying. Ooh, what is that? Alright, so that is Thursday at 8:15. Looks like a news candle there. Alright, and we take out that low, so and we take out this low. If I'm not mistaken, I believe that's the previous week's low. Maybe Friday we can look for some longs, since we're... But after a big range day like this, you have to be very careful trading the next day. Price can be very choppy after a big range because it needs to consolidate. Okay, let me pause it once we get to London. Alright, it's almost at London now. Let's go on to the daily chart, just kind of see where we're at. So yeah, we take out this low. Oh, that was the objective from the monthly. So yesterday's candle, we take out everything, including that level. Most likely a fair value gap will form on the daily. And yeah, I'm probably not going to take anything on this Friday. Maybe longs. We'll see. Definitely don't like shorting after taking out that higher time frame objective. That's why I'm thinking maybe longs. We're in the New York session now. Let's see. This, I do see a range here though. Range high. Range low here. If we can get a deviation on this range low, I might look to target. I think this was the previous week's high, or previous week's low. So it could be a level that price might return back to and retest. And we do have this internal high here. So we do have a range that has formed. Let's see. Here, let me play this candle by candle actually. So we take out the low. Alright, we're trading back inside the range. If we can turn, see, this is a bearish fair value gap here. I want to see if we can turn that into an inverse fair value gap. So if we can get a close above it like that, then I will look to go long. So now we've closed back above it. Let's see, stop down here. Will this give me 2R? No. Will the previous week's low give me 2R? It will. Alright. So I will give this long a shot. Basically, this is the deviation. Alright, yeah, that was nice. Nice fast move there. What, Friday 10? This looks like a news candle there. Alright, so we will journal this. We are doing very well right now. I will probably get a loss soon. I don't expect to keep this up. The reason why I don't want to have like high. I'm not telling you guys like this is a 100% win rate model. Sorry, got distracted. I think this is trade 4. Trade 4. Plus 2R. This model is more of like a 50 to like 75% win rate. Depending on of course the setups that you're taking. If you're taking non-A plus setups, it's going to be less. If you're taking only A plus setups, of course it's going to be more, but then you get less frequent setups. So we're up 7% so far on the month, which is great. Again, my reason for this target here is if you look on the daily chart, for one reason, one of the reasons was because we break below a key level like this and we found some buyers, you know, most likely when we break a key level like that, we come back to retest it. And then if you go back onto the M5, you know, I didn't want to have to target all the way up there. I wanted just the range high, but that did not give me 2R. I wanted this high, but that also did not give me 2R. So this was like the only, you know, 2R setup that I could have gotten from that. So, yeah. I think this was kind of lucky that we rejected that level. Maybe we keep going, but. You know, some people can call it a month here. Because we're up 7%. That's more than enough. If you guys, you know, compound 6% month over month throughout the entire year. Here, this is Sunday. This is Monday now. So let me clear out these charts. We'll build our bias for the week. But going back to what I was saying, if you guys compound 6% monthly over the course of an entire year, then that is a 100% gain, assuming you keep the money in your account and what's it called? If you keep the money in your account and you continue to build that, that's a 100% gain year over year with 6% compounded monthly. But of course, if you're trading funded accounts, you know, you're gonna want to be taking out payouts and things like that. But you know, if this was a funded account, a 7.7K payout, or they would take maybe like 80% of that. But like, let's just say a 7K payout. That's, you know, well for a month. So right now I'm on the daily chart. We've taken out this key level. We created another imbalance here on the daily chart. You know, I would want to see price reach this level before looking for shorts. So yeah, because we've taken out this level, I think this level down here still could be in play this month, since we have like 2 weeks left in the month. All right, so again, right now I want to see price raid that daily fair value gap. This could be a setup right here though. This is Monday though, so I won't take this one. But you have range high, range low, deviation. You know, it did take out the range low already. So, I mean, you can note that as a missed setup, but I wouldn't really count that as a missed setup since I think we still could take the range high, or excuse me, the daily fair value gap. Right now here though, this is interesting because I think this could possibly be a long setup here. I'll short this. I'll give this a long and kind of see how it goes. We'll target, this high doesn't give me 2R, so I'm going to have to target the daily fair value gap, and that gives me 2.25R. The only thing I'm worried about with this setup is to see, you know, it could reject this level, but we'll go ahead and give this a shot. You know, any time I see a setup, I want to at least give it a shot and just let the probabilities play out. Looks like we're rejecting that level so far. Alright, so this was a stop. First loss of this backtesting session. I'm gonna let this play out a little bit more. This is the New York session, I believe. Damn, looks like this was maybe a setup here. I think I might have been just early on this, to be honest. Let me see if I can get filled on the long. Basically, it's the same idea, but it made an additional raid here after rejecting this fair value gap, which was what I was worried about. Let me see if I can get filled on the long. The RR might not be great though. I'm gonna have to put the stop here and target still that daily fair value gap. Alright, so 2R would be here. Let me see if I get filled on this one. I think I'm just early. Oh, what time is it though? Alright, never mind. It's 11 a.m. So I will let this play out. Ah, shit. Well, right idea, just a little bit early on this one. I entered during basically the end of the London session. Should have waited for the New York session on this one. So we'll journal that. Journal this loss. So trade number 5. We are 4 for 5 right now. Minus 1R. And for my notes, I'm just gonna say early entry. You know, usually when I journal, I have a whole trading template that I do, and then I have like a long section for the notes, just for like time saving purposes. I'm just putting in the chart and the results. So all right, so this is now getting close to the end of Monday. I'll remove this for now. This is Monday's range here. Let me draw that out real quick. So we're trading inside that daily fair value gap. I think, you know, the higher time frames, the market has been very bearish right now. This is Monday's range. So this is the daily fair value gap. We'll see if we can get a raid on Monday's high and then deviate and go lower. That is my current bias at the moment. All right, nothing so far. Now we're starting the London session. I'll let this play out. I at least want to see the highs get rated. This might have been a long, though. Raid the, because I do think we'll take out these highs. These are equal highs. Let me see. This is the range low. This is the range high. This is your small little deviation there. Now we'll see if we can get a 2R setup. So if I place a market order, stop down here. Let me turn on the magnet. Stop down here. Again, I'm looking to target this high right here. Maybe a couple pips more, because when you raid a level, it might give you a couple pips more. That might be a little too much. We'll just go somewhere around there. I'll move this. I think we'll probably raid this low here. So let me adjust that. Alright. So that low there is probably just the FU raid, if you guys know what that is. It's just a raid on internal liquidity. Let's place the order. We will buy limit. We will make sure to limit this time. And go from there. The reason why I'm interested in longs, again, we have the range, small little deviation, got nice displacement up. We just have a lot of liquidity up here. So I want to take those levels out. Let's see if we can get, should have gotten filled. Yeah, we've gotten, okay, nice. All right, that was a fast mover. Even if I went long market there, it still probably would have given me 2R, but this exactly was the FU candle. Alright, so this is trade number 6. We just made the money that we just lost on the previous trade. This is plus 2R. And we will copy and paste that chart. Alright. We will let this play out now. Oh, hold up. Alright, let me remove some of this. Damn, looks like I might have missed a setup here. I might have missed the one that I was looking for. I should have been already in these shorts. Alright, so if we're targeting this as the range low, this is the deviation. Let me see if I can get 2R from this. If my target is down here and my stop is gonna have to be here. It's kind of late in the day. I'll give this a shot. The stop is a little bit risky though. But we're up some. I'll give this a shot. When you're up almost 9%, you got a little wiggle room. Especially like a setup like this on a Monday range setup like this. I think this is a really solid setup. Alright, we'll let this play out. So this is now the PM. Still in the trade. This is an overnight trade now, which I typically don't do. Typically we'll just close this out, but I do like this setup a lot here. I'll let this play out. Alright, so we just hit back break even. We're still in the trade though. Let me pause this and extend this just so you guys see that we're still in the trade. Alright, so we're getting close to, yeah, now we're in the London session. And looks like that might have been a news candle. If we, let me pause this real quick. Alright, just pause. See, what I should have done probably is after this down move, I should have raised my stop to at least up here. The reason why is we took out Asia's high and then, you know, saw some displacement. So if it went lower, it should have went lower from this level here, which means I most likely will get stopped out on this trade. And there's a stop. Alright, let me play this out a little bit more and kind of see what happened here, because this was a pretty solid setup in my opinion. Oh, what is that? What is this Wednesday? Is that FOMC? 1400? That's two. Yeah, this is FOMC. Okay, so this was an FOMC day. Interesting. If this was an FOMC, actually no. If I knew this was FOMC, I most likely would not have chased this trade, because majority of the time with FOMC, it will take out liquidity, and then, you know, start the real move. So I think that's what. Yeah. So this was FOMC. And let me just chart this. I mean, this is a deviation of the range, though. We could look for maybe shorts still. Go trade 7. And this was -1R. And just a note, did not know it was FOMC day. Alright, we will go back to the charts. One thing that I'm looking at right now is, you can look at this. This is Monday's range, right? This is now a deviation of Monday's high. We're back inside Monday's range. Maybe here, I'm gonna remove this. I'm gonna remove this as well. I think we will definitely take out this low down here, just based on this reaction. Now I'm gonna see if this is, where the change in the state of delivery is. Let me see if I can, it'll give a 2R setup with this. This would give a 2.5R setup. Yeah, I'll keep it here. And we will place a limit sell on this. So hopefully we can get a retracement and then a fill. Alright, there's the retracement. We should be in now. Oh, this was lovely. That was lovely. Oh wait, did we get filled? Oh yeah, we did. Alright, tripping. Nice FOMC play there. I'll go out, zoom out to the M15. This is a beautiful, beautiful setup. The loss before I took on this was definitely chased, but this setup right here is really nice. Alright, so that is your deviation there. This is your range, Monday's range. We go higher to take out a high here. We close back inside Monday's range. We retrace to hit this order block, and then we dump there. This was a textbook setup here. So we're currently at 10%. I think the goal for everyone should be 5 to 10% per month. Of course, anything more is better, but plus 2.5R, I think. All right. Should we just call it a finish? Because we already hit 10%. And we continue to dump. We take out, we continue to dump there. So Thursday, I definitely will not be taking any setups. Big range day there from FOMC. That is the reason why I'm not looking to take setups. I think we're 5 for 7 right now. I don't know what the heck Friday's gonna do. Alright, we have these lows here. Those got taken out. We have these highs here. So I guess you can kind of look at this as your range. See if we can get a deviation. I don't like this raid here as a deviation, just because I think this was a news candle. 315, yeah, that was a news candle. Let me go back to M5. Maybe we get a setup, maybe we don't. We won't force anything. Yeah, now it's 12 p.m., so nothing here on Friday. Alright, it is now, there's now one more week left. We are up 10%. We could finish here, just because there's one more week. I'm just gonna do it. See what the results are over the entire month for September. Maybe tomorrow I'll continue this backtesting session, do October. Oh wait, shit. Let's do the weekly outlook right now. Let me remove everything. Sorry about that. Alright, there's 1 week left in the month. I don't think we'll reach this level. It's pretty far away. So I'm gonna go into this week not too biased, since we've taken out our main objective so far. So the key thing when you're up like this and you've hit an objective, you definitely don't want to be taking, shit setups. You want to take good setups only. We'll let this play out. Because with that being said, I won't look to take anything on a Monday. We need A+ setups only. Key level to note, I think going into, actually, we'll wait until Monday's ranges form. Alright, so we do a little dump here on Monday. Let me see how far that, okay, we're actually pretty close to that level now after this dump. Maybe we might hit it. What is this, Tuesday? This is still Monday. When you get a big move like this on Monday, that could be the high of the week. Alright, so this is Tuesday now. And looks like we do have a range that's forming here. Let me pause this real quick. Alright, so range high here. Again, find the range, wait for the manipulation, and then look for to target the other side of the range. So we have a range that's formed. You know, our target, our higher time frame target, you know, market has been quite bearish. We might reach this level, so ideally I would want to see a deviation on the highs and then target the low. So we will wait to see which side it deviates. I'm gonna go candle by candle now. So we take out the low here. This is M5. Now we're trading back inside this range. I will give this long a shot. I think these highs are low resistance liquidity, so I'll give this a shot. Yeah, that's a perfect 2R as well. We'll give this a shot. Oops, buy market. Alright, so I am in for longs. We'll see how this plays out. Okay, real nice fast move there. Love to see that. Alright, so here is your deviation of the low. Again, you know, you guys seen this over and over again play out throughout this backtesting session so far. Alright, so that was trade number 9. This was 2.1R. Trade 9 plus 2.1R. And then we'll go back to the backtesting session. Alright, now we're trading. Let me remove this. Okay. Again, this is the same range that we're using. This here, we're trading back inside the range. It broke structure here on M5. I might give this a try too. Maybe we kind of get a search and destroy day. Basically a broadening formation. Let's see if I go market short here. Let me see what the RR would be. Stop at this high. Target this low. It's 1.7. I might have to extend this a little more. Alright. I gotta go market sell. Alright, so now we're in for shorts. Let's see. Oof. Alright. So we'll just journal that. I might be early on this. Let me see how this plays out a little bit more. Okay. Let me journal this first. I might re-enter. Alright, so trade 10. And then this was minus 1R. So minus 1R. And then, yeah, I'm gonna try to re-enter this. Basically, look at this as the deviation. What was the reason why? Let me see. So right at the open of the New York session at 7 a.m., it marked this bottom here and made an additional raid. All right, let me give shorts another try. Win or loss, I think this will be my last trade of the month. That's 1.89. Alright, we'll just go for 1.89 R on this. Reason why I'm taking this is, I think price will continue lower towards that level down there. I don't know if it'll hit it this month because it's still kind of far away, but a win or loss, this will be my last trade of this backtesting session. So we will go market save. I think we should be in now. Come on. All right, there we go. This will be the last trade of the session. We finished this month out up 13.4%, or $13,456. So I will journal this, and then that will conclude our session, and then we'll kind of take a look at the analytics at the end. So we've taken 11 trades. Trade 11, that was 1.89, so I'm just gonna round up 1.9 R. Copy, paste, boom. All right, so that wraps up this backtesting session. Now let's go over, how do I go back? Again, this was my first backtesting session with a brand new FX Replay account. I have another one, but I'm just gonna cancel that membership and just start with this new one. So we backtested an hour and a half today, about 22 days. The win rate was 72%, and the RR, it doesn't say the RR, but it was 13.4% gain over the month, and that was a 13,400 gain on a $100,000 account. So really nice results. Again, you can see how the back testing, the PO3 model, and how we got the results. The PO3 model works, ICT brought it to light for me, but even before ICT, Larry Williams brought it to light for him. So, what I'm really trying to do is really just educate traders and just show them how to trade this model. So if you guys want to watch me trade live with this model, hit the link below and check out our Discord, our PO3 model community. So that is it for today. I hope all is well, and I will catch you guys next time. Peace. That concludes our backtesting session, and I hope you found it valuable in understanding how to apply the PO3 model to the markets. If you're ready to take your trading to the next level, join our PO3 community.
By joining today, not only will you learn how to master the PO3 model, you'll gain access to a community dedicated to your trading success. If you made it this far, thank you for sticking to the end. Your commitment as a trader will set you apart, and I can't wait to see you inside the PO3 trading community. Happy trading.